Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 321. My God, it's been a long time. We started this in 2021, sometime first half, and we've shot now 321 episodes. So I want to congratulate my team for putting in all the efforts and for all your efforts in watching our content and giving us some lovely feedback and loving the weekend investing brand. Today's topic is, should you invest in the US markets? And I'll give you my take on it. Well, there is no right or wrong answer here, but I'll give you my take on this post the initial market summary. And in the markets, no prizes for guessing. PSU banks were on fire again today, up 3.8%. 3.8% up in a single day. For 1 week, up 7.6%. 1 month, up 20.3%. 3 months, up 42%. 12 months, 64%. And financial year 2023, up 66%. And there are managers out there who are saying don't invest in PSUs and PSBs. I don't know what should be done about them, but IT stocks up 1.1% on back of good Nasdaq gains last night. Private banking also up 0.7%. Nifty closing up 0.6%. Autos, infra, pharma, metals all up by a marginal amount. FMCG and real estate taking some hit today as profit taking. So all markets are poised to receive the Fed minutes in the next day or so, and we will react to the hawkish or dovish outcome or outlook of the Fed. If the Fed hikes by 0.5% and says that it can foresee the ending of the hikes in one or two next meets, I think all markets will go up very, very rapidly. And India, especially, is poised to come to a new all-time high very, very soon as we get a hint that the price hikes may be coming to an end. And I think on our domestic front, with growth sputtering in the last month, with inflation coming off and growth coming off very sharply, I don't think we are having any more hikes, as is my guess on that. Broader indices, small caps up 0.57% along with Nifty, CNX 200, CNX 500 also up 0.5%. Mid and small cap index also up 0.47%. And Nifty next 50 was the odd one out with minus 0.17% down. In terms of weekend investing, small cases, many small cases doing very well today. MI 30, MI 20, MI 50, MI 35, MI 25, all gaining between 1.25% to 2.6%. MI Evergreen, MI All Cap, India Top 10, NG 5050, ATH2, all in the green, and NNF 10 and MIST ATH being in the red today. Heat map for the day, no particular sector besides PSU banks was doing really well, but IT stocks, as I mentioned, HCL Tech, HTCS, Infosys, Tech Mahindra, all doing well. Mild gains in private banking. State Bank of India, of course, leading the PSU charge, but the mid and small cap of the PSU banks is where the action was, and we'll see in the top gainers. Reliance, ONGC, bit flat. ONGC doing well at 1.4%. Levers, ITC, Nestle, Britannia, flattish. In autos, Mahindra doing well at 1.5%. Tata Motors also doing well at plus 1%. Other than that, not very remarkable gainers or losers. Top gainers in the CNX 500 universe, no prizes for guessing. Central Bank up 17%, IOB up 15%, Yes Bank up 14%, Hudco up 12%, and Bank of Maharashtra up 10.5%. So huge gainers uh, in this segment. And on the losing side, macro tech developers losing 5%, Reddington losing 3.7%. Laura Labs down another 3%. So we have been showcasing Laura Labs technical charts since long. I think from early November, and there was a complete breakdown of a head and shoulders pattern here. Currently at 391, but let's see where it goes. Dr. Path Labs, Lal Path Labs down 2.8%, and KEI Industries also down 2.8%. Should you invest in the US markets is the question. So, while we normally think if you ask somebody who has not invested in the US markets, 99% people will tell you that, oh, we missed the bus, we should have invested in Google, Apple, Tesla, so on and so forth. But I want to showcase what is actually happening. So Nasdaq 100 is their popular technology index, where all the technology stocks, all the new generation biotech stocks, etc., are there. Now Nasdaq 100 is the most volatile, aggressive index that is there in the US markets. And I've plotted last 20 years of data of Nasdaq 100 is this blue line that you can see. It's up 1075% in the last 20 years. It's a phenomenal return. But I also want to showcase the CNX IT index that we have here in our domestic market. And I've normalized the CNX IT index by dividing it with USD INR rates so that we are comparing apples to apples in a dollar on a dollar to dollar basis. And you can see that for both these indices, the gains over the last 20 years have been very, very similar, almost 1000% on each of them. So you could have invested in the domestic market and enjoyed the same gains what the Nasdaq has given you. Isn't that remarkable? I mean, I hope that at least some of you would have, this would be a sort of a aha moment for a lot of viewers, because in general we are so fascinated by all these big names in the US market that we forget that our stocks have also done equally well, and that too in dollar terms. In INR terms, I mean, CNX IT has gone up dramatically versus the Nasdaq. So, no harm done if you have not invested in the US market. And the biggest advantage, I'll tell you a little bit later. But let's also look at a broader index. So, a broader index like S&P 500. So, S&P 500, as you all know, is the most popular US 500 stock index. All the large caps and mid caps are present there. All the popular stocks are there. And I've taken even a further 30-year data on this. So 30 years of S&P 500 index is the blue line in front of you, and the orange line is the Nifty, our popular index, and normalized in dollar terms. So Nifty in dollar terms is the orange line, and you can see that over 30 years, both have somewhat similar returns. In fact, Nifty has done better at 900% versus 800% on the S&P 500. So had you invested in S&P 500, you would have received the same returns as Nifty, slightly lower. But yes, there were periods where Nifty was not doing well and S&P was doing well, or where Nifty was doing well and S&P was not doing well. So that complementarity may have been there. So some diversification benefits you would have got for sure. But net from start to end over a long period, there doesn't seem to be so much of a difference between the two indices. So both on Nasdaq 100 versus CNXIT versus S&P 500 versus Nifty in dollar terms, like to like comparison, you're seeing that there is hardly any difference in the returns. Now comes the clincher. The taxation of domestic investments, as you very well know, long term capital gains is only 10%. But the capital gains that you will pay if you were investing in the US markets will be the slab rate of your return. So it will be taxed at 30% or 42% if in case you are a high flyer. So the idea is that the net of tax returns from the Indian markets, the comparable indices, would have been much, much higher than the US markets had you been investing in the US markets. And I'm not even calculating the very high cost of money transfers, the currency, the exchange rate that one has to pay while investing, and one while receiving funds back from the US. Of course, the advantage is that you can do marginal investing, where you can even buy a fractional share in the US. That advantage is obviously there, but over a larger period, the returns are the same, but taxation is much higher, costs are much higher, uh, and for me, I see not much reason to go out of the US Indian markets to invest in the US markets. And also, the fact should not be forgotten that we are looking at a decade for the emerging markets, especially India markets, going forward. So uh, I mean, most global financial experts are calling it a lost decade for the US, the next coming many years. So I don't know how long these or how long this entire bear market for the US is going to last, but Indian markets are definitely poised for new highs, and it does seem like that we are in for a good time in the Indian market. So this is my take on the US versus India debate. Of course, there is no right or wrong answer. Please take your own call on this. Please consult with your own advisor. But my sense is that the history points that there was no great loss, for not having invested in the US markets. But the perception is such that oh, we should have invested and we've lost a lifetime of opportunity. But that is not the case. There is enough opportunity in the Indian market. Stay with the Indian market. You know more about the domestic markets, domestic companies. There is more research available domestically to you. So I would highly recommend that you stay with the Indian portfolio. So thank you so much for your time. If you have further questions, please do send us mail. And my request, as always, is that please do share this video with at least one of your friends or relatives, or somebody who you would like to bring into the stock markets. Stock markets is a great way to create wealth. It's a great way to beat inflation. Please dispel this notion that stock markets are a gambling den with your relatives or friends who think so. Show them the right path. I mean, that is your give back to the market for whatever wealth market has given you. So, thank you so much for your time, and I'll see you in another one. Bye.